Welcome back to Schwab Network's Crypto Corner. I'm Jenny Horn. The Genius Act passed in the Senate. Stablecoins might be coming to a retailer near you. And Coinbase is making waves in the financial markets. Let's break it all down with Nate Peterson, Director of Derivatives Analysis at the Schwab Center for Financial Research. Nate, before we get to some of these charts, the Genius Act, of course, passes in the Senate. How significant is this achievement? What does this really mean for the crypto investors and stablecoin overall's adoption?
Hey, Jenny. Yeah, so, good news for the crypto industry. I think it was probably expected, although there has been some pushback along the way, but it is making that incremental progress passed at the Senate. It'll make its way to the House. It still could get or be subject to some revisions. But if approved at the House, then it would go to President Trump and then brought into law. But it's just basically establishing framework around stablecoins, which are getting a lot more press these days. And some of the what was passed is that basically, look, you can have a stablecoin, and then it needs to be backed by highly liquid assets like the U.S. dollar or treasuries. There's going to be monthly audits that would be required to make sure that there's not stable coins that are collateralized by liquid assets or fiat currency, that's actually going to be there. So you'd be subject to these audits if one were to move into that space. And then you'd also be subject to the anti-money laundering laws as well. And a stable coin is essentially, you can kind of think of it, Jenny, as, I think most of our viewers probably know, but it's like a tokenized dollar. You're taking dollars and you're putting them on the blockchain. And the difference between a stable coin and a cryptocurrency is that stable coin is meant to peg its value to the underlying asset that is collateralized, such as the U.S. dollar, such that the price does not fluctuate. So nowadays, or the vast use case of a stable coin has been for a lot of the traders and for DeFi as well, to have that stability if they want to trade amongst cryptocurrencies, that they would move in and out of that stable coin, and they know that they can go to something like the USDT or Tether, etc., and have the value of their money basically hold its value until they allocate it elsewhere. So, look, this is all part of Web 3.0, blockchain, DeFi, tokenization of real-world assets. It's happening, Jenny, and it's moving quicker and quicker. And this passing of the Senate and the push forward of this bill is just kind of demonstrating what this crypto-friendly administration is doing in terms of moving into that 3.0 world.
Okay, and speaking of all good things, stable coins, we do know that Walmart and Amazon are exploring the use of their own stable coins, a really fascinating development. Tell us more about this.
Yeah, Jenny, very fascinating. I think it broke last Thursday from the Wall Street Journal, reporting that they are, the two largest retailers are looking to explore having their own stablecoin. It hasn't been confirmed by the companies, but it makes a lot of sense given the amount of volume of transactions that these retailers do per year. Why would they want to go to stablecoins? Well, the bottom line is to save money. Right now, they're paying roughly 2 to 3% in merchant fees to the credit card companies. And if they can issue their own stable coins, have their customers have wallets per se, and there's an Amazon coin that you could then buy your Amazon products on, that is money that wouldn't have to go to the credit card companies. And you could also have more kind of complete data on consumer spending behavior that the companies would have access to, so they could tailor their the experience that their consumers have on their website. And on the consumer side, why would they not just stick to their old credit cards when they go onto Amazon? Well, Amazon can then offer loyalty points, or they could offer discounts. And keep in mind too that if Walmart and Amazon are going to save on that 2 to 3% that they would have paid to the credit card companies, perhaps that could be transmitted to lower prices. And then if you think about the cross-border aspect of this, meaning internationally, eventually, if something like a Walmart or an Amazon were to move into this area, the transactions would be a lot smoother, cheaper, faster. And that's really the bottom line of 3.0, or using stable coins or utilizing the blockchain technology. If you can do it faster, cheaper, or more securely, then it's that provides the economic use case for it, so to speak. There's economic feasibility to adopt something like this. Now, of course, this is it's moving quickly, Jenny, these days in terms of the technology, the regulation. There's a lot of infrastructure that needs to be built in place. There needs to be the regulation that supports that. There's custodian aspects of those backed assets, and so we're early here, but you can kind of see how the evolution of this DeFi, so to speak, Web 3.0, is starting to present those use cases with the complementary regulation that is moving down the pipes. That you can see what happened to the likes of Visa and MasterCard. Visa's down 10%. Basically since that announcement last Thursday. If you look, they're down again today, along with MasterCard, along with PayPal. Think about how we move money around using Block or PayPal or Cash App or Visa or MasterCard. And then if now we're going to move to a cheaper, faster, more secure way of moving money around the globe, that it potentially could be a negative impact on a lot of the traditional finance companies. Now, could Visa and MasterCard have tokenization as well and utilize the blockchain? Absolutely, but there's going to be competition, and competition for the companies or the likes of Visa and MasterCard, that's likely going to mean less fees or lower margins. And so as a result, you can see their stocks are getting hit.
I mean, absolutely. And I love that the economic feasibility of this entire space, I think, will be so fun to continue to watch develop. But let's take a look at the charts here. What else are you watching as of late? And of course, Bitcoin.
Yeah, no doubt. So let's take a look at good old Bitcoin, the most well-known cryptocurrency out there. It definitely continues to be in its uptrend. We saw that it found support at the 200 SMA back in April. It did technically go make a new high at 111K here recently. And there's a lot of these, crypto green shoots, if you want to call them that, in terms of a lot of state governments that are looking to add Bitcoin to their balance sheet. Corporations, you see a lot of these announcements where corporations are also adding Bitcoin to their balance sheet. Institutional adoption is also picking up. You see the likes of Fidelity making purchases, etc. And then retail adoption, or at least the trend of potential retail adoption on a wider scale. All of this should be beneficial for Bitcoin, but I would say this: we're starting to get a lot more of these IPOs that are coming out within the crypto space. It used to be that you can, if you wanted to get Bitcoin 10 years ago, it's pretty exclusive. You would go to, Gemini or Coinbase or one of those places, one of those exchanges, have your wallet, get your Bitcoin, and it was kind of exclusive. And when you look at Wall Street, on those companies that traded there, there were some miners, there was MicroStrategy. Look at Strategy, how Bitcoin has moved to new highs, and yet the price of Strategy has kind of languished on a relative basis. When I look at the chart of Bitcoin here, basically what you'd like to see is obviously go make a new high above that 111K, and I have 100K basically as near-term, we'll call it support for this asset. And I'm a little bit concerned that the more supply, the more competition for investment dollars into these other crypto related type assets like Circle that we saw that came public recently, there's the potential that maybe we don't get the fast, violent, swift move higher in Bitcoin price like Bitcoin bulls have been accustomed to, even though we have all of these green shoots in place. So on the technical side, I'm just keeping an eye on that 111K. You'd like to see new highs, ideally on higher volume. And then you really probably don't want to see it break below that 100K level as well. So we'll keep an eye on Bitcoin. The uptrend's still intact. But when you get supply of new crypto investments, assets, IPOs, etc., I think you need to be mindful of that.
Yeah, I mean, I completely agree. And you mentioned some of the languishing price we've seen perhaps of strategy as of late. One thing that is not languishing, though, on Wednesday's session at least, is Coinbase. I mean, huge upside, seeking now SEC approval for blockchain-based stocks. Okay, so walk us through what this means, because Coinbase has been definitely a stalwart of this entire space, seeing a huge move on some of this news.
Yeah, certainly. So, yeah, it potentially could be big news. It almost seems like, again, with Web 3.0, what you're trying to do is take tokenization, which is moving real world assets onto the blockchain. Why? Because it's more secure, it's 24/7, it's faster, it's more efficient in terms of transferring assets or trading peer to peer. Ideally, globally, 24/7, instant transfer of any asset that you deem valuable. You can tokenize it, it's on the blockchain, and that's kind of the dream of Web 3.0. So, what's Coinbase looking to do? We've seen BlackRock move into some of their products and tokenizing, meaning put some of their funds on chain. We've seen Fidelity apply for that as well. Coinbase is going to the SEC and saying, hey, we'd like to tokenize stocks, meaning we're going to take your stocks that you would trade and we're going to put them on the blockchain, and therefore they can trade peer to peer. And again, there's going to be a lot of consideration around this in terms of, having custody. You want to make sure the liquidity is there. That's probably the biggest thing. So if you think about the stock exchanges now and the liquidity that you have there, what is liquidity? What makes up liquidity? Well, it's the most popular party. It's where everybody goes that has these assets to go exchange with each other. And so if Coinbase or other firms eventually look to tokenize stocks and they want to have the benefits that blockchain provides, you're going to need the liquidity. If the liquidity isn't there, it's not going to be a party that people want to go to. So that's a very important component of it. Again, we're still early in the tokenization of real world assets. Really, a lot of these are financial assets like, deeds, funds, stocks, etc. But you're going to need that liquidity. And so that's just another consideration when we think about, well, what happens if merchants get their own coin? What happens if Coinbase offers tokenization of stocks, but it's only open to customers? Well, the idea is you want to have open source. Everybody's involved. All the transactions are open to the public. So, everything is verifiable. Everything is instantaneous. So that's the idea. And so it's going to be interesting to see the evolution of those companies that are looking to tokenize stocks or to have their own stable coins. How do you bring in the rest of the world and have the regulation and the compatibility and the network technology side of the equation that will account for any usage spikes? We're early, but it's exciting to see. This is like early days of the internet that we're seeing Web 3.0 coming into play, and these announcements by these companies, JP Morgan as well, looking to get more active on their blockchain. It's exciting to see these news flows pour in. It's likely we're going to see this only increase over time.
Absolutely. I mean, the evolution of crypto that we've gotten to watch, just like in our brief tenure, has been so vast and so quick. It's been so exciting. So thankfully, we have like the honor of getting to discuss it every single week. So even more of a reason to tune in to the Crypto Corner. But appreciate it, Nate Peterson, for all of that insight. Remember to subscribe to Schwab Network's YouTube channel for more of this crypto-related content. I'm Jenny Horn. Thanks for tuning in.